Hey guys, Boris Schlossberg from BKT, week of March 17th. Had a tough week of trade, and I want to go this week from back to front to analyze exactly what went wrong, what were some of the problems with these trades, and how we can improve and repair them in the future. So let's start with the last trade we did, which was the Aussie Kiwi trade. And this was a sort of a neutral trade. This is a trade that probably would have worked had we been good on the analysis. I think if you look at it, we came in short over here. The trade was basically in what I call the no man's land. It was neither in an uptrend nor in a downtrend. So technically, it really wasn't a great place to be. It was much more of a fundamental play where we were basically trying to trade the New Zealand retail sales against Australian employment. We were correct on the New Zealand part. The trade dropped our way just a little bit, not enough to give us T1 profit, and then we're dead wrong on the Australian employment part, and the trade just basically took us out. Ironically enough, and this is something very tough that happens in trading all the time, is that ultimately we were correct in a direction, the trade resolved our way. But one of the key cardinal rules of trading is that being early is the same thing as being wrong, and it's just simply a fact of life you have to accept. This was a miscalculation on fundamentals primarily, and that was the thing that drove the trade down into the ground. It's kind of hard to say whether this was a wrong trade or a trade that we probably would not do. The one thing that I would say is that it was clearly not a trade that went with the flow, because we were trading essentially no man's land right in here. So it didn't have much of a technical foundation behind it. Ideally, you want to have both. We probably should have made a better choice, but we felt very strongly on the fundamentals, and we were just dead wrong. So that was a medium trade. The trade that I think was really poor was this euro-pound trade that we tried to fade right over here. And this was really a story of us liking the pound and just thinking, hey, euro-pound is just really overdone. I mean, it's just completely overdone. This is one of the stupidest things you can possibly do in trading, where you think something is just at an extreme. Extremes in trading just don't exist, because things can go much more to an extreme than you think. This was an extreme over here, and yet we're now above 77. The problem is that unless you have a really strong indication technically that price is exhausted, you shouldn't try to guess that the price is exhausted. And this was probably one of the poor trades. We tried to guess essentially the price was exhausted. We did have the fundamentals behind the UK that we were betting on. They actually didn't go our way. We managed to salvage the trade in the sense that we flipped out before we got stopped out, but it was probably a poor trade from all angles go. There were so many other better trades. One example that I wanted to show you is that what could we have done that would have been better? And if you look at the fact that we were bullish pounds at the same time, and you look at the pound structure, this is the same day right here, the candle is right here. We could have gone long pound, because as you can see, if we were bullish pound, buying pound over here in the uptrend at a good value level would have been a much better trade. It's just that we thought the risk on this trade was going to be much hotter than the euro pound trade, and it was again a matter of trying to be too clever by a half. Should have gone with the flow simply, and it would have been a great move. The one trade that did work, that was a fade trade, ironically enough, was dollar yen. And this was the dollar yen trade right here that we went fading on. And here's what I want to show you, that if you are going to fade, if you're going to go against the crowd, at least do it at a mathematical point of an extreme. So in this particular case, where we went long dollar yen right here at this point, it was already pierced through and touching the second Bollinger Band. It was already 2 standard deviations away from its mean. It gave you a much higher statistical probability that at least some kind of a bounce was due. One of the big mistakes is to try to make a fade trade when it's right over here, when it's already made a little bit of a turn and it just enters into no man's land, and that's where you get chopped up. So you're going to fade them at least where the statistics are on your side, even though it's not the optimal strategy. Still, as you see, the much better strategy is to always try to go with the flow. Anyways, that's the lessons from this week. Next week, we're going to try and look for much more flow-related opportunities. Try to kick it back again, and see you at BKT. Boris Schlossberg, over and out.